Essential infrastructure at Ausbil is something that we've come out to define just the universe of stocks that we're going to invest against. And when you think about the evolution of infrastructure, it's taken on quite a broad path. So infrastructure investing really started from a fund side back in the 90s on the direct side. And what they were focused on at that time was water companies, airports, toll roads, assets that we call essential infrastructure today. But it was really that small niche component of it, and those assets delivered really high returns and a great experience for investors. But as the interest grew, more money came into it, the availability of assets was relatively limited, we saw that scope expand. And so they started to move into core plus, and the core plus plus type of value add opportunities of infrastructure, where today we're at a point where infrastructure investing from much of the direct funds ends up being a lot more thematic of infrastructure. You got servicing being a big component of it, or rolling stock, and not that physical essential infrastructure that investors initially were attracted to the asset class and has delivered the returns that they expected. Where we sit today is the first time where investors in the listed space have access to only invest in essential infrastructure, kind of back to basics, really where the asset class is birthed from. And that's really your toll roads, your airports when we think about transportation. It's your long-haul pipelines, your regulated utilities, and mobile communication towers. And that's it. We're not trying to define what sectors are essential infrastructure. It's really building around what are the attributes that each individual company and ultimately the sector can deliver. So we're looking for monopolistic assets that operate under long-term contracts, that have inflation protection, that have downside protection embedded into them. And importantly, the negative screening of it is, removing any type of the cyclicality associated with some of these companies and/or commodity sensitivity or competitive landscape. So, essential infrastructure, under generic terms, is really a subset of core, is the way we think about it. And traditional core infrastructure assets like midstream energy companies that have commodity sensitivity, we don't include because that adds an element of volatility. When we think about communications, there's satellite companies that have a lot of competition. Before it used to be a duopoly and operated in a really stable environment. Now you have, the global tech companies of the world with Google and Facebook and Amazon competing in that space, and it's completely changed, and that dynamic has changed, so that monopolistic characteristics have eroded